Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'll be facilitating this session tonight with Rob Roy. As always, we need to go over some important housekeeping details about the session, and then I'll introduce Rob. First and foremost is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously and you've seen this, the main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website if you'd like to read it in full detail there, or certainly feel free to take a screenshot of it if you like, but that's the main point to take away. All right, so for this session, as all of us that have been around for some time know, we are live streaming to multiple different platforms. So Rob goes through his general presentation, goes through some case study considerations, and with the time remaining, he will take a combination of questions from all the platforms we are streaming to. So there's only about, I'd say, 15 minutes tops on that. So if we don't get to your question, just know it has nothing to do with the validity. We just only have so much time for this session. With that, take it as encouragement to attend the insiders meeting on Thursday nights when it's for our paid subscribers only. And there's a 45-minute Q&A portion solely based for our subscribers. So obviously a much higher likelihood of getting your question addressed in that session. On the chat window, we have available at all times. I can handle any support-related queries in there. And of course, for any interaction amongst other attendees, please feel encouraged to use that window. Just make note for our Zoom audience, by default, it goes to hosts and panelists. So if you would like everyone on the webinar to see your message, be sure to change the to everyone. All right, well, the market gapped up today after that CPI report filled that gap. So we're waiting on the Fed tomorrow. Going to be interested to hear Rob's thoughts on that and, of course, to interact with you all. Thank you for joining us for this live session. At this moment in time, I'll introduce who we're all here for, and that's Rob Roy.
Thanks, Zach. Thanks, everybody. Welcome to TradeFinder Live. Special welcome to everyone joining us on the various different social media platforms out there. One of these days I'll get caught up with how all that stuff works, but thank goodness we got Zach to take care of all that. So we're streaming to multiple different social media platforms. The way TradeFinder works, if this is your first foray into TradeFinder, Zach already went through it pretty well, but we will talk about not just the US market, but international markets as well, because we have a lot of international viewers. And we'll review a case study trade alert that we send out to our EWO alert subscribers. That's at ewotrader.com. We actually have an alert service there. And then we will review, as Zach said, the previous case study considerations we've identified here at TradeFinder, and then see if there's one that we can find for tonight. And with whatever time's left over, we'll open that up to the general Q&A. So let's go ahead and take a look at the chart. As Zach said, we gapped up in the YouTube short. And if you're watching on YouTube and you haven't visited our channel, please do so, Elliott Wave Options at YouTube. But we also do our shorts most days, depending on scheduling, etc. And talked about the fact that after this gap up on the open, the market did two of the things that I talk about all the time. And if you've been here before, you've heard them multiple times. One of the things is gaps get filled. We actually have a t-shirt that says that. And then the other one is no security in any time frame. It's very far away from the 10-day moving average. So there was the open, gapped up. And you look at the 10-day moving average, you can see that on that open, there was some pretty good separation there from where we opened and the 10-day moving average. So basically after the open, the market spent the vast majority of the day moving downward, filling the gap. It was a pretty methodical move to the downside. We hit the 10-day moving average, we filled the gap, and then we bounced back up, finishing slightly to the upside to finish the day. The volume was above average. So the CPI report came out and the headline number was a 0.1% gain, which is lower than expected. They were looking for a 0.3 gain. But what's interesting to me is the core CPI, which is ex food and energy. They throw those out because we don't eat or put gas in the car. So who cares what those prices are? Obviously being sarcastic, but the core CPI was up 0.2%. We learned from our PPI report on Friday that food prices are still pretty high. So I found it pretty interesting that the core CPI without food or energy, so without the high price food, was higher than the headline number that included food and energy. So obviously on the headline number, there was enough of a drop in energy that it offset the rising costs of food. But those two, you could kind of consider the fact that they canceled each other out, but there's still some inflation there. And I don't know if it was that caused the market to sell into it, if it's just the fact that we gapped higher and we're above the 10-day moving average that causes selling, or if it's like, all right, that doesn't really matter that much. We want to see what the Fed has to say tomorrow. So we're not going to get too serious about going long. Some combination of all of the above probably is what caused the market to sell for the majority of the day. Again, even though we finished to the upside. And I did want to show you our zigzag pattern. I'd mentioned to you before that although we got really close before, normally the prices actually get touched. Well, technically it didn't get touched, but look at that. I mean, awfully close. We did make a new high from the high on December 1st. Still didn't quite hit 411, but got within a half a point of it. So we're starting to get to the point where, is that it? I would have a hard time arguing with that, but all bets are off for tomorrow. If the Fed comes out and they're a bit more dovish, then we could see a rally like we had this morning, but hold rather than being sold into. And the difference is the Fed meeting is going to be in the afternoon, so it's not going to be a gap open type scenario. It'll be something that occurs around 2 o'clock when they make their announcement, and then we'll see the market action move from there. Just to show you, there has not been a relabeling of the Elliott wave pattern. It's still showing this pattern, which is disqualified. People have asked about that on YouTube. Why does it show that if it's disqualified? Well, it just shows it because that was the most recent qualified pattern. Once a new pattern becomes qualified, it will change and relabel to the new qualified pattern. So we've been showing you the zigzag, and that's worked out extremely well. And then once a new pattern, as I said, becomes qualified, the chart will relabel. I just turn it off because it doesn't matter, and just check it each day until we see whether or not there's been a relabeling, etc. So not much else to say other than the fact that tomorrow's a big day to see if the Fed drops down to 50 basis points. Do they go another 75 based on the PPI? What's going to happen tomorrow? What's priced in, if you want to know what's priced in, is 50 basis points. So if the Fed goes 50 basis points, whatever reaction that comes out right at the Fed announcement will probably get quickly retraced. That happens often. Talked about this before. The Fed announcement comes out, the market makes some sort of a vertical move up or down, and then that gets retraced, especially if they do 50 basis points, because that's priced in. That's not a surprise to the market in any way, shape, or form. So if they back off to 50 basis points, if we jump to the upside or jump to the downside, expect that to get retraced likely in the afternoon, if not throughout the trading day on Thursday. All right, so taking a look at interest rates, you can see that we're just kind of waiting here, a little bit lower on the 10-year, but we're still at this area between the 50 and 61.8% wave 4 corrective level on the TNX. And then taking a look at the dollar, a move down in the dollar today and didn't really spur the market too far to the upside. Now, we've talked about how the dollar's down here to 45% wave 4 correction. So we could go a little bit further, 50%, 61.8%. And perhaps that happens, especially if the Federal Reserve seems a little more dovish. I think you could see a big move to the downside in the dollar. I think this is a good thing. As you know, I'm a fan of a strong dollar, but not this strong. So I do want to see a good, solid, strong dollar. But now we're starting to get back into an area where, okay, if we do start to get some better economic numbers, and if the Federal Reserve starts to calm down a little bit, then we could start to get some little better earnings without the concern of the currency exchange rate. I wanted to go ahead and show you the yield curve again. I do think this is the fly in the ointment. I am so tired of hearing people on the financial network say that this doesn't matter. It always matters. And I'm a big believer in the fact that we always talk about nothing's 100%. Well, the 210 inversion predicting a recession is 100%. is probably the only thing in the market that has 100% accuracy rate. So I don't think we can discount that. I'm constantly hearing people saying, oh, we may not have a recession and all that. All those are people with ulterior motives, and I just don't buy into it. I do think we're going to have a recession next year. And I think we're going to start to see it with the next earnings report. I think I've been pretty consistent on that viewpoint. The fact that the Federal Reserve is likely going to go too far with their rate hikes, and they'll go from a rate hike to a rate cut from one meeting to the next. So we'll have a rate hike one meeting, a rate cut the next meeting. I've been saying that for months. So, I mean, I may be wrong. I'm wrong a lot, but that's been my viewpoint. And as I said, I think I've been pretty consistent in that viewpoint. So taking a look at the diamonds, we take a look at the Dow. And this was the first market, as you know, to relabel away from the 5-wave to the downside pattern. You're going to see pretty similar things going on here with the fact that we gapped up and then filled the gap throughout the trading day. But you can see that we did label the wave 5 here on the diamonds. So that's something new. So if the Fed's a little more dovish, does that give us a rally tomorrow? And then we move up. Is that the start of the Santa Claus rally? It could be. And take a look at the Qs. I could see a scenario where we rally into the end of the year, and then when the recession woes hit and the next earnings cycle comes out, that we start to turn and go back down. But look at the Qs. We're there finally. The wave 4 at the 61.8% corrective level. That's what we got on the open, and then we sold off. But what really remains important within this LA wave pattern on the Qs is that 280 level. So if we start to head back below that, I think you can say we're in the start of the wave 5, but we've been waiting for this wave 4 to move up to the 61.8% level. It's there. So we would have to take out this high and move higher to disqualify that pattern. So we remain in a scenario of 3 different markets between what the pattern is on the diamonds or the Dow, the SPY for the S&P 500, and then the Qs for the NASDAQ. 3 completely different patterns. They will come back together. Which one wins? Interestingly, looking at some of the comments on YouTube from the last video over the weekend, some people were saying the Qs are the leader. I've been asking, are the diamonds the new leader? Did the Dow decide, hey, it's going to resume its leadership role that it held for decades before the S&P and the NASDAQ became popular? Some people are saying it's the NASDAQ that's the leader. Valid point. We'll see. We're going to find out which of the 3 markets, but amazing that we have 3 different markets giving us 3 different chart patterns. As I said, you don't see that very often. So let's look at the IWM. Could we get above 190? I'm sure you already know the answer to that. The answer was no. And that wave 5 pattern is disqualified. So we were at 180 for a week, just sitting dead in between. I'm not going to draw the lines again because I do it every week. Between 170 and 190, the trading range, 180 being the midpoint. We've been there for a week. We gapped up, didn't gap above 190. And then look where we closed. Right back down there, 181. So right back in the midpoint again. So just frozen in this 180 level. And I've talked about how it's been at 180 for a week, but you've been between 170 and 180 for nearly 2 months now, just sitting there churning sideways. Bitcoin. Now, are we starting to get past some of this FTX stuff? Because look what's happened here. If I can type in the symbol correctly. Look what's happened here with Bitcoin. We got to move to the upside. So perhaps we're breaking out of this level and we're going to go up and test 20,000 again. I'm pretty impressed with that. We did move down to 16,000. We said if we broke 16,000, we're probably headed to 12. But we just went dead sideways for 2 weeks. And I mean dead sideways, nothing happening, even intraday. But we've got a little bit of a move, trying to see if we can go up and hit that 20,000 level. So maybe the crypto world is done with this whole FTX news. It's old news now. I'm tired of hearing about it. And let's start to move forward and get past all that stuff and get back to normalcy. Hopefully, because I don't know about you, but I'm tired of hearing about it in the news every single day, and your phone and everywhere. It's just headlines, some new thing regarding FTX. They had the congressional hearings today. It's been everywhere. Enough. Let's just move past that. We know what happened, or we have an idea what happened, and let's just move on and move to something else. But pretty interesting to see that break from that just dead sideways move that we've had here. Following, we had the big move down on the FTX news. We bounced up a little bit, went sideways, and we're trying to break back up towards that 20,000 level. That could be important. Perhaps a little bit early. I think we're supposed to get into, from all the people that talk about the halving process and everything with Bitcoin, we're supposed to get into next year a bit before that starts to happen. But if we can get back up to 20,000, I think that's a bullish sign heading into what is supposed to be a bullish event for Bitcoin. Looking at the EWA, so taking a look at Australia and what's gone on with their market compared to ours. The key here is not much of a downward move there, but we're still holding that 61.8% wave for correction. On the positive side, we're holding above 23. So we're just kind of in a really tight window here on the EWA. Support at 23, resistance at that wave 4 at 23.88. So less than a point separating support and resistance right now on the EWA. Which one wins? If we hold 23 and break above this and disqualify this pattern, then we're off to the races, probably coming up to test these highs here in the Aussie market all the way up to 27. But if we break below 23, then we could be looking at the potential of something more sinister here and a move back down in the wave 5. It's got to break 23 first. So we'll see how that plays out, but don't want to say that now. Right now, it's just wait and see mode. Which way do we go? We've been kind of going through that whole wait and see scenario here at Evo Trader 2 over the last couple of weeks. Haven't sent out a tremendous number of alerts, but we've done pretty darn well on the ones we have sent out. So looking at EWC here for Canada. Now look at Canada. Now it did break down and broke below 34. Let me try that again. 34, but 33 is the really important level, he tried to say. So maybe we come down to 33. If not, if the market is bullish here in the US tomorrow following the Fed announcement, maybe we jump back to the upside. But we're kind of in no man's land now between 34 and 33. So it's interesting that on the Aussie market, we're in no man's land between 23 and 24. In the Canadian market, we're between 34 and 33, but looking to the downside on the Canadian market, potentially to the upside on the Aussie market. So pretty interesting scenario there. Again, if you go around the world, there's so many different tales here of what's going on. Looking at the INDA, which has been so resilient and for a good part of the year, the strongest market. We did have this blip down at the end of September and early October. Well, we regained it right away, holding back above 43. As long as you stay above 43, I think you have to be long the INDA. So if it breaks below that with follow through, you can see it's tried. Each time it's tried, there's not been a follow through day. See that? We go close below it, no follow through, close below it, no follow through. Same thing over here, close below it, no follow through. There's not been ever a follow through day breaking below 43 here over the last couple of months. So if you're long the INDA, I think you stay long. If we break below 43 with a follow through day, then I think you get out, or you just turn and go the other way because there's nothing to stop it from going to 40. So it could be a good downside trade. If you break below 43 with a follow through day, then you trade to the downside all the way down to 40. But we have to get there first. And so far, being stubbornly above holding that level there at 43. All right, taking a look at Hong Kong. Hong Kong has been overbought for a while, and it still is. Look at that. That's amazing. I mean, if you're looking for a short, I think you would be hard pressed to find one better than this, because we went to the 61.8% level. We thought we might back off there. Nah, we're going to go higher. coming out of the zero COVID policy in China, et cetera, and Hong Kong's off to the races. Is it going to make it all the way up to 2268? It might. It's just we're consistently overbought. A little bit of a pullback would be warranted just to calm down a little bit so that this move will hold. But I was really surprised to see how well it held in today's market. But again, pretty overbought here on Hong Kong market. And I get it. You know, they're coming out, and what worse news can you have of shutting the entire country down of China for so long? Things have to get better. Market looking ahead. I get all that, but we've been overbought and we're still overbought. And I just would like to see some sort of a pullback here. I would like to see us come down, hang around this 61.8% level for a few days, let the 10-day moving average catch up, build a little bit of energy momentum, and then make a run at the 100% extension. I think that would be a stronger move and a move more likely to hold and continue. So even with the fact that we opened higher and sold off, still just a little bit overbought. So we'll see how that plays out over the next few weeks. Looking at, I think probably the metals are going to come up in the Q&A, oil. So I'll save that. I did want to go through and show you one of our case studies that we just closed out today, doing this in honor of Zach. Zach's favorite stock, NVIDIA, as you know, you guys are always talking about it. You were talking about it while he was ill. And you know that he's a Ethereum guy in the crypto world, but when we're looking at stocks, you're looking at NVIDIA. And so we had this entry here on December 1st. You can take a look at the chart and see that we were breaking to the upside. We had a supportive DMI, so it looked like we were going to go higher. We had that potential move all the way up to 220 there, and you're going to see that, well, why did you get out if it didn't make it all the way to 220? Well, look what happened today. So you can see that big move to the upside on the gap up here, and we'll keep an eye on it. So you gap up, great separation from the 10-day moving average. We're overbought. We nailed this pretty well on the exit. The stock finished much lower than where we got out. And so hopefully people were that were following that were on top of the alert, because it did move all the way down. Got as low as just up under $2, finished a little higher than that, but we did a pretty good job of sending that alert out near the high of the day. But with a gap up and that significant separation from the 10-day moving average, too overbought. So we'll keep an eye on it. We'll watch NVIDIA and we'll see if we get another entry. But this is how the alert service works at evotrader.com. Every single alert has a page just like this, where it shows you the entry, shows you the exit. You can see it was a 60% gain in 11 days. So pretty nice looking trade there. And then we have our mark to market graph. And you can see that this position was down 50% at one time. And it follows along with the methodology where I'll stay with a pattern. Our risk management system is not, if you hit an X percentage loss, you automatically exit. I know a lot of people have those systems. I don't. I stay with the pattern. If it drops down, it's a loss, but the pattern is still there, then we're going to hang in there, and we may make an adjustment and stay with a pattern that still looks good. So if you had looked at a system here where, okay, and if it hits a 50% loss, I'm out. Well, you got out and missed a 60% gain on that. So just every single day, every single position shows you this, where it stands. And this one turned out to be a nice one. 60% in 11 days, I think everybody would agree, is a pretty good result. And maybe it gaps up again tomorrow and you can say, well, you exited too early. But when you look at it, it's already down from where we got out a few dollars. So it's going to have to go up more than a few dollars before it looks like we exited too early. But I don't care. I'll take 60% in 11 days every time. So not concerned about any potential, hey, we got out a little bit too early. I'd love to see it go to 220, but I'd like to see it pull back first, and then we can ride that if that's what ends up coming out of our Fed meeting tomorrow. All right, looking at some recent case studies. So we had Oshkosh here. We talked about this one last week. This was the entry and then it moved to the downside, moved back higher. It's not in a good sector right now, but it did hold above 85, which was where it needed to hold. So maybe stay with this one if you're following along with it. Monster Beverage. So we knew that we were overbought when we looked at this one back on November 22nd. You can see the separation. So we knew it was overbought, but we moved back, got to a new high, pulled back a little bit. But as long as we're holding this 100 level, I think you stay here. You can see that really nice open there. Couldn't hold it with the market. Would have liked to have seen it close above the 10-day moving average. It didn't. But as long as it closes above 100, you stay long this. If it breaks below 100, different story. But holding there is the key level. I wanted to show you Yum because I talked about this last week. We did exit this one, and our exit's pretty good because it's gone dead sideways since then. We're looking for a new entry to get in, but the option values on the calls have come down. So we exit that one pretty well, and that's the difference, right, between TradeFinder, where we look for case study considerations, and then you're completely on your own. The trade service, the alert service that we have at Elliott Wave Options is we give you entries, any adjustments, and exits. So taking a look at LAD, we looked at this last week as a downside trade. So we were right at 226, and then we closed at 220. So we're down $6 from last week. So looking good so far on the downward move there. And if by chance LAD could break below 220, now we really have something working. So that was kind of the easy move down to 220. This is where there's some support. But if it can break 220, then we have a pretty significant move down from there. We also looked at an upside move on Cigna. So take a look at this. So there we were, and then watch what happened. Boom, to the upside. Well, if you follow along with this, hopefully you got out yesterday. If not, again, we don't send out alerts on TradeFinder, but hopefully you exited that one yesterday or on the open today. Would have been good, but not so good on the close. So we're gonna take that one off because that was such a good move. You had to be a bit nimble on the exit, but pretty good. We'll leave LAD on and see, even though it's a $6 move to the downside. Let's see. Let's give it a chance to break that 220 level. If it can break below 220, then maybe we have something moving, and we can look to have a really nice gain. If it holds 220, then we'll go ahead and close it out. But let's give that one a chance. All right, so let's see if we can find a case study consideration for tonight, and then we'll open it up to the Q&A. So taking a look here with the market move today, holy cow. I didn't really expect that. As you know, the way I do this is I don't pre-look at these because I don't know, that's kind of cheating, right? If you look ahead or preset things. So we go through and we look at them together. I'm just stunned that there's 14 results in my bullish impulse search based on the fact that the market, not because of the open was great, but the fact that we sold off. Yes, we finished to the upside, but we sold out. Look, there's some, we already have PWR on our alert service. And then you can see there's bonus points for anybody that knows what a Acushnet is. Anybody? Zach, tell me if anybody gets that right. I'm going to come back and tell you what that is in a moment, but you got to be an older golfer to come up with that. You can see the symbol is golf, but who are they the parent company of? Anyway, I'm not going to give any more hints. I want to see if anybody can come up with that. I'll come back to that in a minute. But obviously, when you see Netflix, we want to take a look at Netflix. But notice some of the tech stuff that's here. Adobe, Cisco. Yeah, it's good seeing some of that stuff on there. Let's take a look at, when you got Netflix on the chart, you got to take a look at it. All right, so I kind of made a joke about this because we featured Netflix in last weekend's recording again on our channel on YouTube. And I was joking, and well, are we going to go into a significant recession and everybody's just going to stay home and watch Netflix? I mean, why is it moving up? The market always looks ahead. When nothing else was moving up, you had this big, bullish move out of Netflix. And then if we take a look, this really doesn't look bad still, which is amazing to me. Look at the DMI, still looks strong. We're not really overbought. So we're at 320. I think we go to 340. I think that's probably going to be our case study. But look at that move to the upside. Almost. I mean, we've got a kind of a pennant pattern. Is this some sort of a diagonal that we have going on here? But you see that the pattern there is something's going to happen from that pattern. It looks like a breakout move, but the ADX is too high for us to look at any sort of a strangle or anything. So we'll stay directional with it. And with the strong DMI, I think that we probably see 340 on Netflix. So let's leave that one open. I'll look at a couple of others. Anybody come up with who? You've had time to Google it now, so that's not fair. Did anybody get it right away?
Andrew from Zoom did. Andrew Smith.
Titleist.
Come through. Yep.
Titleist.
And I guess there was a couple answers for that because it's also FootJoy.
Well, it's the same company now. It used to be Acushnet was the parent company of Titleist. Titleist and FootJoy merged, so Acushnet now has Titleist and FootJoy. But the golf balls used to actually have Acushnet on them a long time ago. We're going way back. So kudos, Andrew.
Also, got to give credit to Paul from YouTube who didn't Google and came through with the Titleist correct answer.
Oh, good on you. Yeah, it's that's a weird name, Acushnet. So yeah, you got to be a golfer to know that one. So good job, everybody. I'm pretty impressed. All right, so well, let's look at it. Right? I mean, talked about it, so let's go ahead and look at it. But it's not doing a whole lot. It looks like it might be getting ready to do something here, though. Remember how golf took off during COVID? Because it was a sport where you're out and you're separated, and they didn't want you grabbing the pins. But other than that, golf had a little bit of a resurgence during the whole COVID lockdown thing and everything. So we're moving up here, but the ADX hasn't broken above 20 yet, so we can't do that yet. We got to let that actually happen. So maybe we'll look at that next week. Clearly want to look at Adobe, see what's going on there. Good to see PWR still on the list since we already have an alert on that one. And so see if there's, see we're in a qualified downward pattern here on Adobe, even though the DMI is trying to say that, you know what, we may, it did break above 20 though, didn't it? Yeah, it did break above it today. But we sold down to the low. I think with Adobe, you want to see it hold 340 here. If it holds 340 and disqualifies this pattern, we could be off and running. So maybe that one's one for next week. Let's give it a little more of a chance. But I really like that separation between these two directional indicators. Even on a day where we close at the low of the day, we still had that great separation. So that looks pretty good. So those are people that have been saying that, hey, the Qs may be the leader. If they disqualify that pattern and take off, they're going to be the third pattern to have done that. So is that a leader? But I've always talked about how when things do turn and when the market does start moving forward, that's where you're going to find some great results, is because they've been underperforming. So that's where the money's going to go first. So perhaps it's starting to go there. Maybe. Look at one or two more. Let's look at Cisco, and then we'll open it up to questions. So taking a look at Cisco, hanging in there with the DMI. That one looks pretty good too. A little more mature, I think, than Netflix, right? Yeah. That looks pretty good, but I think we're going to stay with Netflix. I think we're going to use that one. So Netflix is going to be our case study consideration for tonight. and the target's 340. So, we're not in this forever. Just a little bit of a movement back up towards that, hit that wave 5 right there in the tap box. This program is called Profit Source. For those of you that are wondering what's he using there, to me, it's the best Elliott Wave software that exists on the market. I've tried all the ones that I know to exist. You can find out more information about it at hubb.com if you're interested. They're the creators of it, and it is programmed exactly to the algorithm that Ralph Nelson Elliott wrote. It's nobody's personal adaptation, which a lot of the Elliott Wave software programs have tweaks and personal adaptations to them. This is just pure Ralph Nelson Elliott's algorithm. Nothing, no little other things mixed in. All right, so a few minutes early, Zach, but I really don't have anything else to say, believe it or not. I know that's an odd thing for me. So let's just go ahead and take some questions.
No worries at all. I'm sure everyone's in favor of some extra time for questions. So we'll start out first with a question here from James. I would like Rob's opinion on SMAR with a gap up on earnings.
SMAR, what was it, the deal on earnings?
Gap up.
Oh, okay. Well, I filled it, but wow, that DMI looks strong. So the issue here you have is that it's just overbought right now. All right, so here's what you would like to see happen to this. Just let it consolidate here at 40 for a couple days, because the DMI looks awesome, and you just don't see a DMI set up much better than that. So that looks great. Let it consolidate here around 40 for a day or two, and then I think you're going to have a good run up there to that 45 to 47 level from there. But it'd be hard to do it now because it's overbought. Just again, some consolidation there around 40. Give it a couple days there, right around that 40 level, and then look to go long. So that's a hard one to short, though. If you were looking to the downside after the gap, I don't think that's a short. That looks good to go further to the upside. Just like to see it consolidate a bit first.
Speaking of short, Chris has got a couple. Chris from YouTube's got a couple symbols for you that he's thinking about shorting. First one is DE.
We're short on Caterpillar, so same thing here, right? And I don't get these stocks, why they haven't come down. I'm totally with you on this. It's gone sideways for a while. That makes you nervous, other than the fact that the ADX got all the way up to 45. It breaks back below 50. That should be the end of it. Is it going to be a great short? Perhaps it comes down and fills this gap. It should do that. I don't know that it goes much below 420 though, because that was just a really nice 45-degree angle move that I like. But it should come down and fill the gap at 420. So from that standpoint, I do like it. Caterpillar has finally started to move down a little bit for us, but it's been stubborn as well. Unless I'm way off base on the recession, etc., I don't understand why these stocks have not fallen sooner. But they talk about the generals are the last to fall, so maybe that's just the way it's working. These have been strong runs, and they're hanging in there and trying to hold their gains, etc. And maybe they're the last ones to go down as the recession starts to come in. I am convinced we're going to have a decent recession just because of the significance of the yield curve. No one's going to convince me that it doesn't matter. You can tell me that. You can give me some excuses. I'm not going to listen to you. It's going to go in one year and out the other. I've been around a long time, and it's always mattered. And I just feel that it is significant. And I just can't see how Caterpillar, Deere, all these stocks are going to stay up in that environment. So maybe we got to wait a little bit. Maybe it has to be after the first of the year before it comes down. But I think at least you got 20 points to the downside, and then I'll know. We'll see from there. So what's the other one?
I couldn't agree more. And you actually just called the next one. It's Caterpillar.
Oh, okay. So that makes sense, right? Because both of them. So we've got puts on Caterpillar, and it looked like we're ready to go, and then the doggone thing goes back up today. But we'll see how that. Here's the resistance level. we're going to stay with our puts as long as it stays below 240. Why hasn't it come down? Because we're looking at filling this gap down here around 200 on Caterpillar. I don't get it. You know, we do look at fundamentals for foundations around our technicals, but there's no fundamental reason for these stocks to be hanging in there. It's just institutions are holding them there because they've had good gains, and so they're holding on to them, and they're not gonna leave until they're forced to. But then when they do, when the generals go, they go hard, and that's why. Because the institutions bail all at once and you have significant selling volume. I think we're going to see Caterpillar at 200 again. Maybe it'll have to be after the first of the year before that occurs. You know, we started a downward move, looked like we're ready to go, and then here we going back up to test 240 again.
Thanks, Rob. I see we had a hand come up here from one of our Zoom subscribers. Unfortunately, we don't do voice questions for this session. There's just not enough time, but in the insiders meeting, we have plenty of time for voice questions and encourage those, of course. So please feel encouraged to raise that hand on Thursday if your question isn't answered by then. So this is a good quick teaching moment for you for any of our new subscribers out there. Question was, when you say follow through day, does it have close previous day? Because there's a second bar in the same spot, but not a third bar.
So when I'm looking at, if you go out and Google, this is a good one for me to talk about, Zach. If you Google a follow through day, they'll tell you that the follow through day can occur a couple days later. I don't look at it that way. For me, in my definition of a follow through day is the next day. And these things, you know, when you've been trading for over 25 years, you notice things. And I don't claim to be always right. In fact, I say I'm wrong a lot and I'm still learning, but I have learned some things and I like to share those things with you, like the 10-day moving average and other things along those lines. But for me, the follow through day is the next day. So when you have, let's say you're breaking a moving average, you're breaking out of a triangle, you're breaking a support or resistance area, the next day needs to, if it's an upward break, needs to close higher and not closing at the low of the day on the bar, but a good solid up day on the next day. So I'm looking for 2 consecutive days. So in the same direction. So if it's a break to the downside, I'm on a lower close on the second day. So I'm looking for 2 days, 2 consecutive days with closes in the general direction. So again, if you go in the internet and Google follow through day, it'll tell you the follow through day can be a couple days later, but I don't look at it that way. I want it immediate. And I found that to be more successful for me in looking for, does this move have strength or is it likely to get retraced? So anyway, that's the way I view a follow through day.
Very well. Thanks, Rob. We're going to go over back to YouTube. JJ would like you to look at Amazon. Says his wife went long on a small position today.
Okay. Let's hope that she made a good move. It had a nice move to the upside today. Amazon's, you would have to look at that and see what I respect Amazon because they were honest. They came out, they're one of the few retailers that came out and said, you know what, it's not going so well. This year's retail sales have been disappointing so far, where other retailers they're kind of being wishy-washy and not being committal. But Amazon came out and said, it's not going great. And I respected that. And so they moved lower on that news. That was back here, right? So after this big move to the upside, they came back down to 90 again because they admitted that. And so maybe they got that out of the way. So the fact that it held in this area just below 90, we got back above the 10-day moving average today, even though we came down and it was almost as a mirror of the market, right? But you didn't want that gap up anyway because that wasn't going to hold. So holding the 10-day moving average on the low, and the fact that they've gotten the bad news out of the way by already admitting that it's going to be a bad season retail wise, and it could come out at the end and surprise people. So it's not going to surprise to the downside on Amazon, right? So I guess what I'm trying to say is I like the risk reward on going long Amazon, even though the whole space is not doing so well. You could have more of an upside surprise if after the first of the year, Amazon comes back and says, well, you know what? It ended up okay. We didn't think it was going so great. Black Friday wasn't that great, but it ended up okay. And then you see Amazon take off. So I like your wife's play there from a risk to reward standpoint. I think it makes sense. And you stay long unless we break this area here around, this 88 area. As long as it stays above 88, you stay long. But if he breaks below that with a follow through day, I think you got to get out because you got to be wary of this wave 5 down here. But unless it does that, you stay long. So, you take a shot, and I like the risk reward aspect of that. So, yeah.
Very well. Thanks.
I don't know if you wanted me to say something bad about it, if you wanted to give her a hard time. I don't know how you felt about your wife's play there, but I actually like it.
JJ says, thanks much on Amazon. I'm going to show my wife this video. So I think he's
okay, cool.
He's all good. So staying with the big names, we're going to go over to Tesla.
Yeah, I figured that one was coming. I wanted to look at that one beginning, but I was like, somebody's going to ask about it anyway, so we'll just wait. And, we've talked about this and said that, we were probably going to see 150. And where did we close? 160. We got all the way down to 156. If you remember, I think that was right around where our target was prior. And so they're mad at Elon. They really are. I mean, if you read about it, and I know that the super Tesla supporters are like, this isn't because of Elon. I think, you start the ball rolling, and what's the news, and, it being the CEO of 2 big companies, and there are only so many hours in the day, even if you don't sleep, like he doesn't sleep. It's just, it's tough. And the fact that we have broken below this wave 3 low, I'm feeling like there's more to come to the downside on Tesla, and think we're gonna break that 150. And let's go back and see where the target was going back. Yeah, see, there was the target there, 156, and we basically got there today. There was that original target, and so we're there. To go back and draw that line, see if we didn't come awfully darn close to hitting that. Yeah, look at that, hit it dead on. So that's what I thought. So we've hit the original target, and now it looks like it wants to go even lower. I don't look at the DMI. Looks really good as far as a downside move, but you can't play favorites. I talk about it. The DMI is not my favorite indicator on the way down because it's too lagging and things move down too fast. So I like it on the way up, not on the way down. So on the way down, I prefer to look at the CCI, and that's getting there. There's a little more room to the downside to hit one of these extreme point lows. Not a whole lot, but a little bit. So we could go a little lower. So perhaps we come down to, gosh, could we get to 140 or 145? Probably. We're a tiny bit oversold on today's move. But what's going to happen is if it, everything feeds on itself on these downside, the snowball effect. And if it gets low enough, people are going to start to bail, and institutions are going to start to bail, and they're going to take their gains. And all of a sudden, you're going to start to see Tesla valued where it should be, rather than this incredible premium that are built into it because of the affinity for Elon and his visions and all that kind of stuff. And no question, the guy's a visionary, and he created something amazing. But it's been a rich stock. It's been an overvalued stock, and it's becoming more fair valued very quickly. So anyway, long-winded explanation. It's a little oversold right now. I don't think we're done going down though. Not by the way we broke that wave 3 low with the follow through day today. I don't think that's the bottom.
There's been a lot of chatter around this stock, but Will thinks that the Cybertruck's going to give it a boost. So we'll certainly.
They might, but if they know that though, and then there's the excitement that's built around that. They've got the semis that are out now. They actually have them out. It's just, I understand all that kind of stuff, but from a technical standpoint and the way it works with institutions is there's they've got all these big gains built in this stock, right? At some point in time, we need to take this. We need to realize this gain before we lose them. And then that starts to snowball things to the downside. And no matter what happens, it goes lower. But I mean, maybe you're right. I don't think it's going much lower, but I just don't think this is the bottom.
Very well.
The Cybertruck's cool looking though. I mean, that's a cool looking truck. I can't wait to see him driving around the road. It's wild looking.
I agree with you on overall design. It's something I'm not sure about in utility though. So maybe I'll change my mind if I see one in person, but I can't wrap my head around having a truck that I can't use as a truck,
Okay, Mr. Ram truck guy.
So another teaching moment here for you. Nick says, "Hi Rob, I've started to get into day trading. When you're looking at 3-minute charts, do you use the same EMA 10, 30, 50? Also for intraday trades, do you use the DMI, CCI as your primary indicators? Also, what time scale do you look at?" I thought you said 3 minutes.
I do. I look at 3 minutes, and I can tell you if you're day trading, the only moving average you need to look at is the 10-day. So look at the DMI and the CCI, get really good at those, watch them, learn about it. The DMI matters when that ADX moves up and you get that separation and it moves above 20, pay attention to that. If the ADX is below a 20, then don't pay so much attention to the DMI and really watch the CCI. And when there's separation from the 10-day moving average, it's coming back to it. Just watch it. It's always going to come back to it. I've got charts. I might be able to. I may still have one that I can show. That's on my other computer. I've got some charts, some 3-minute charts that shows how it separates from the 10-day moving average and it comes back with some other computer. But just watch that. Don't pay so much attention to the 10-30, the 50. Well, you don't need to pay any attention to that. Watch the 10-day moving average. When it gets separated from it, it's going to come back to it. And as far as a directional basis, if the CCI, look at the CCI average on the 3-minute chart. And then when it gets underneath, it goes back, it's going to go higher and vice versa. But pay attention to the DMI. If that ADX breaks above 20 and it's between the two, that becomes the default indicator. Then you don't look so much at the CCI, you look at the DMI and you trust that. Like, in other words, if the ADX is moving up and the negative directional indicators on top, that means the market's going down. So if it blips up, that's a selling opportunity, because if it blips up, it's still going to go lower. But if you just don't trade it right away, get used to it, watch it, and make notes or paper trade. And if you follow along with that, I think you'll find that you'll be really successful doing that. Just stay with those 3 things: the 10-day moving average, the DMI, and the CCI. Follow along with what I said. Practice trading it for a bit, and I think it'll be like, holy cow, this works.
Thanks, Rob. A few requests for gold.
I figured that. Well, yeah, I mentioned that before, that gold or silver. I wasn't going to show those because I figured that was going to be asked. I figure oil will probably get asked before we're done too. But I'm just so impressed with this move to the upside in GLD. Coming down here to this 165 level, that should have been an entry. I feel like we missed that. And so I'm waiting for it to come back down here. The gap up today surprised me. The intent was because we had this gap up here and we came back down. I was waiting for it to come back and kind of missed it right here. But then it moved back down yesterday. It's like, all right, perfect. We're going to go in today. And it gapped up again. So I'd like to get another shot at 165. I believe I'm on the record on one of our recordings as saying, hey, 165 is your entry. If it comes back down there, that's a pretty good entry. I missed it, but if it comes down again, I'm not going to miss it again. But I think I just got a feeling like this pattern here is going to become disqualified. But what's the negative here? The negative is if the Federal Reserve comes out and they're ultra dovish tomorrow, that could change things. That could break 165, and then all of a sudden we start this wave 5 lower. So that's the negative. So it's got to stay above 165 to stay long. If it breaks below that, then we could be looking at something different. And I want to see what gold does tomorrow with the Federal Reserve likely backing back down to 50 basis points. I want to see what happens with it. That's going to tell us a lot on whether or not gold's going to hold 165 or if that's the end of the upward move. I just don't want to think that it is, but it may be. It's going to do what it's going to do. 165 is key, and how it reacts to the Fed announcement tomorrow is key.
Very well. We still have tons and tons of questions and not much time, so I'm going to get through as many as I can with the time remaining. Let's do oil followed by Boyle.
Great. Well, we might as well cover them all then, right? We'll do gold, oil, and natural gas. So, yeah, USO. So we came down here. We had a bit of a doji. We got oversold. Expected that. Now I want to see, because we have a strangle on the USO, and we got down to the strike price of the put. So it was about to move in the money, but we were oversold. We knew that. So we're going to wait and see now how it reacts to the 10-day moving average. Where does USO go from here? Does it break back above it? Well, then we may close the put off and just let the call run. But it's got to do that first, right? It's, always joke about the Missouri scenario, right? It's got to show you. Can it get back above that 10-day moving average with follow through? Then we take the put off. But so far, it's just corrected an oversold condition. We were oversold way down here from the 10-day moving average. So now we're back. Now we're at the 10-day moving average. What happens here, I think, tells us a lot on whether or not oil turns and heads back lower, or if that was the bottom and it turns and moves back to the upside. We'll know in the next couple of days what's going to happen with USO. And then Boyle for natural gas. We nailed natural gas, talking about it going down before, but now it's had a pretty nice bounce back to the upside. Doji today, right at 40 here on Boyle, and that is a major point of support resistance. So it broke above it and took off before, but it couldn't hold it, and it came back down. And why? I think because it went too vertical. And that's why I'm talking about this all the time. Vertical moves just don't hold. But if we take it again and we can move this way, then maybe we have something. But we are moving into the not so favorable time of the year for natural gas due to the fact that the market is already looking ahead. And I know we still have, the winter, and we could have a really nasty winter, and perhaps we have some blips up, but the market's already looking towards springtime when we come out of winter. And so this is not, from a seasonality standpoint, not the greatest time of the year for natural gas. But if it gets above 40 from a technical standpoint, that's what we look at. We look at the technicals. So it gets back above 40 with a follow through, then it's going to 60 again. It's going to go test that wave 4, and that would be a really nice move out of Boyle. So can it stay above 40 here and give us some follow through? That doji is going to tell us a lot tomorrow, I think, on this. But if it starts to break higher, then I think you're going to 60.
Thanks, Rob.
All right, let's do two more real quick. I know we're after 10, but let's do two more real quick.
Sounds good. Let's do IBM.
Oh my goodness. Big blue, oldie but a goodie there. I haven't looked at that one in a long time. Was that earnings today? Nice move to the upside there. Or was that just the stuff? No, it wasn't earnings. So just kind of going with the whole NASDAQ Q's theme. Oh, that's what we had. We had a triangle. That's why. So we had, and remember, we talked about this, but we look at bigger triangles in our volatility portfolio, but Elliott always don't sleep on the small ones. And that's what happened there. So we had a triangle that broke to the upside, but now it's overbought. So if it comes back down to test this breakout point and we have a decent market, then I think IBM looks pretty good. And it's a blue chip, right? Which is, the Dow was the first to relabel. Maybe that's where we need to go moving forward. If we are going to go into recession, that is where money's going to go to hide in the strongest, biggest companies. Pretty interesting there, but it's overbought on the breakout move. I'd like to see it come back and test that breakout point, and then I think you've got something more to go there on the upside. Again, in a decent market. If the market just tanks, then everything's going to go down. But this is one of those that they're trying to hold in there, like what we were talking about with Deere and Caterpillar. They're trying to hold these, but I think this one will do better than Deere or Caterpillar because at least it has some positive fundamentals rather than negative ones behind it.
All righty, and the last symbol for this evening is going to be Dish.
A couple of them that we used to look at a lot and hadn't looked at in a while. So, is this going to fall in the same line as Netflix? It makes you wonder, doesn't it? I mean, with that run in Netflix, I can understand whoever asked this, why you're asking it, because you see that big move in Netflix. Is that going to be where money rotates in a recession? I think this goes higher. You've got a big breakout move today, a little bit overbought. Hate the gap. Wish it wouldn't have gapped, but you don't really have any significant, maybe some at 17, but you're probably going to 18, maybe even 19 here. But I don't know what happens tomorrow because of that gap up. I'd like to see it come down, and it makes me nervous when they don't fill the gap immediately, and they don't always. Because if they fill the gap immediately, then you feel, okay, now I don't have to worry about the gap, and then you feel more comfortable going directional. But if it goes up again tomorrow, then you're like, I'm going to miss the whole move waiting on that gap to get filled. So that's where the challenge comes in with where gaps get filled. But I do think that we see likely 17, 18 out of this, probably 18, maybe 19, especially with the impressive move out of Netflix. Thanks, everybody. Really appreciate your attention as always. I sign off. Time is the most valuable asset we all have. One of my favorite college coaches, shocking passing of Mike Leach, humorous guy. I like humor too, and the sarcasm and everything. He was just a coach that I always watched, and a glaring example of, our time here is limited. So we really appreciate you devoting your valuable time to us, and we really do try hard to make it an educational, informative use of that time. Thank you so much. Appreciate it. Have a great rest of your week.